Good morning. Welcome to Trading Hour. It's a brand new week of Trading Hour. I'm Reema Tendulkar. With me, Surbhi Upadhyay. And the first tick on Trading Hour is that we're currently down close to about 0.5%. The Nifty's at that 17,781. The fall came in the first 45 minutes of trade. We actually opened up in the grain and then we had the decline. But since then, in the last 1 hour, things have pretty much been sideways. We've actually managed to move up a tad bit. The Sensex is lower by 250 points. There is weakness across the rest of the Asian markets. So Hang Seng is under pressure. Taiwanese markets are weak. Korean markets are down close to about 1%. The levels to watch from here on. One will be last week. The intraday low on the Nifty was 17,651. That's the last week intraday low. From there, we managed to rebound. So that's going to be one level to watch. After that will be the 200-day moving average, which is roughly at 17,300. The sectors which are under pressure, one is the Nifty IT index and the other one is the PSU banking index. So the Nifty PSU banking index is down close to about 2% and the Nifty IT index is also under severe pressure. That's down 1.6%. Remember, last week, while the Nasdaq lost nearly 2.5% in trade, the Indian IT index actually managed to show some gain. It was up close to about 1%. And typically, you have the Nifty IT moving in tandem with the Nasdaq, but that was broken last week. So perhaps there is a bit of weakness, some catch up on the way down that the Nifty IT is seeing. There are some big earnings losers today. So Balkrishna Industries, 70% lower in profitability. Profits are down 70%. And this is despite many other tire companies like JK Tire, Polo Tires reporting pretty good numbers. On Info Edge, revenue growth has slowed down because the IT hiring is weak. There is an impairment loss that the company, a charge that the company is taking. You know, Surbhi, Info Edge invests in a lot of startups, right? As investee companies. As pure financial investors, not strategic investors. In one of the investee companies, they're saying the company can't raise further funds. It's facing a funding crunch, and therefore they're writing off the entire amount.
And that's pretty serious. That's very, and it tells you that we've come a long distance from the time where there was a lot of private equity money chasing a lot of these new ideas, new concepts, or startups. And that entire ecosystem has gone through its own motions. And I think, that rationalization is perhaps taking a toll on some of these companies that Info Edge invests in.
Exactly. And the fear in the market will always be, right, could there be another one? Right, which faces difficulty in raising funds because Info Edge also invests in early stage startups. They're not the late stage, investments which typically are well funded, where the business model is, rock solid. But anyway, on the other flip side, ABB and BHEL, Maheshwar was telling us the numbers were pretty okay. In the case of, I think, ABB, the margins improved to 15%, much higher than estimates, but the stocks are weak in trade.
Yeah, so we've got all kinds of result reactions going on, and I completely take your point. I think the broader market is where it's being felt a lot more clearly. Earnings season is over. Whatever pops you had to get on some great numbers is pretty much more or less done. Last 2 days remaining. Just to take on your point of, a company like Info Edge, that actually got me thinking. I started looking at a lot of the so-called new age companies and how they've been doing, because we've got a couple of results over the last, 48 hours or a little more. Just very quickly pull up what's happening to a PB fintech. Now, that's one example where the market's willing to give the thumbs up to the fact that profitability perhaps is going to come slightly earlier than envisaged. For instance, CLSA is actually saying that the PBT loss, the loss at the PBT level, is lower than what they anticipated, and that's giving them hope. And there's a lot of commentary around some of these stocks. Paytm is seeing some follow-through buying, but Zomato has cooled down. Nykaa is still down about 2.5%. So this entire universe is not running up together as a bunch. It is very, very nuanced with some of these stocks. Finally, very quickly on the Adani Group, color is still entirely red. The stocks will come up for you on your screens. A lot of the uncertainty continuing as we're waiting to hear more from the regulator, from the finance ministry, and ultimately from the courts as well, perhaps now, on what direction this entire story is taking. And we're, of course, waiting and watching for that. So that's pretty much the market. I think wait and watch indeed is the mantra for the market as well, with this cut of 0.5%.
Okay, let's straight away get then to our corporate radar. We've got a lot of corporate conversations waiting by on Trading Hour. Puravankara is the first company on our radar on the back of its Q3 numbers. The company reported its highest ever quarterly sales. Realizations are also up 15% on a year-on-year basis. To discuss the outlook going ahead, we're now joined by Abhishek Kapoor, the CEO of Puravankara, and he's going to take some questions for us. Abhishek, morning, and thanks so much for joining in. You know, I was just looking at 99 Acres numbers because InfoEdge reported their numbers and they have this real estate portal 99 Acres. And they, in the conference call, seem to indicate that the higher repo rate hikes, the interest rate hikes, have started hurting demand. And that's a trend that we could see going ahead. Could you tell us, is that something that we are witnessing? Do you think volumes could come down or realization growth will start getting capped? Collections, any guidance that you could give for the next 2 quarters?
Very good morning, Rima. Thank you for having me on the show. Our view really in terms of what's going on in the marketplace is currently we're not seeing any real impact as far as the repo rates are concerned. The number themselves are showing, as you rightly mentioned, we are up 20% in the sales value, highest ever. Realization's gone up. A project in real estate typically has a appreciation cycle as it goes through the development phase and as it gets ready for delivery. So typically the appreciation happens from the launch price right up to the delivery. So in that sense, I think that appreciation will continue. On the demand side, we are really not seeing any impact as of now on the ground. I can share with you in all honesty that we are not seeing any impact as of now, because I think the customers have also become very sharp. They understand during the buying cycle there will be a phase that they will go through in over 10 to 15 years of loan repayment, where the interest rates will go up and down, and they manage their cash flows pretty well. So far we haven't seen it, but yes, we should watch out and be careful on how do we see this trend panning out. But I believe that in next 1 or 2 quarters, we don't see any significant impact, especially for the branded players. If at all, there may be some impact, there could be for the category B and category C players. But generally for branded players, we don't see any impact as of now.
Okay. Take that point, Mr. Kapoor. But my question is, fair enough, maybe people will not shy away from taking that home loan and making that house purchase. But could higher rates limit your capacity to push through more price hikes? Now, that's another thing that one needs to bear in mind, the price elasticity you have. And if you could break that down across both the segments, Provident and, of course, the premium end of the market as well. How is pricing playing out and how much elbow room do you have on both sides of the spectrum?
That's a fantastic question. So, if you look at our portfolio, over 80% of our portfolio is in sub 2 crore bracket, including Provident and Puravankara. It's almost about 15% of our, unit value, which is above 2 crores in the total portfolio, which we are selling as of now. So in that context, anyways, when you look at the price hikes or the interest hikes, you don't see any significant impact on the EMI increase. The second piece of question which you had is on the realization. So, as I mentioned earlier, I think realizations normally factor in the current environment at the time of launch. And then as you go through the project and as you develop the project, the prices appreciate because the supply comes down, inventory gets sold out, the financial closure is there for the project. And as we get a response on the product from the customers and we do the development, typically the prices go up. So in that sense, as I earlier mentioned, the prices will continue to inch up for the projects which are showing progress. Let me share with you something interesting. For example, for us, our collections went up by almost 90% year-on-year basis, right? And that's gone up because we are really focused on operations and construction. And that also sends out a message for the customers. If you see progress on the side, if you see project getting closer to delivery, typically prices go up because the demand for such projects goes up. So, in that sense, it will be available in terms of price increase, project to project and micro market to micro market basis. But yes, you're right that there may be a limit on affordability. So, for example, there could be an impact on how much loan a person can take, right? Because interest rate has gone up. It will also depend on the upcoming appraisal cycle that's going to come. So we'll have to watch out for that on how much limitation it causes. So a guy who was, willing to buy a 2.5 BHK and wanted to push it to 3 may not be able to push it to 3, if this continues in the same direction. So I think those are things that we need to kind of watch for and see where it lands.
So up trading seems a little more difficult. Abhishek, could you give us an indication of the volume and value of projects which are scheduled for delivery in Q4 and in the first half of FY24 or the whole of FY24? Some numbers?
Look, we don't give forward guidance, but if you see the trend, we are now really focusing on delivery. In fact, in the last quarter, our revenues went up by 67% year-on-year basis. That's on the back of delivery. EBITDA went up by 51%, 128 crores. So that's again back of delivery. We will see that trend continue in this quarter as well. What's going to be interesting is that we have already launched 4 million square foot in the last 9 months. We are adding another 2 million square foot in this quarter itself. And then overall from here to the next financial year, we're looking at adding another 16 million square foot of launches. So on an overall basis, this will add in excess of 10,000 crores of potential top line for the business for us. So I think that's where the focus is, on the new launches and the sales, and of course delivery. So you will see more and more delivery happening in this quarter and continuing that over the next few quarters.
Can you repeat those numbers? 4 million square feet launched in 9 months. An additional 2 million will be launched in the March quarter, Q4 FY23. And for FY24, what's the number?
So if you look at it, total of 16 million square foot, so another 14 million March onwards.
40, okay. And the whole value of that will be 10,000 crores.
10,000 plus.
Got it. All right. Okay.
All right. Abhishek, good chatting with you. Thank you very much for taking out the time and stopping by with some of those details. We do need to get into a very, very quick break. Equity markets have been sulking today. We'll find out what's happening in the world of commodities on the back. As promised, let's figure out what's happening in the world of commodities. Manisha Gupta is joining in for exactly that. And Manisha, it's crude that's giving even us in the equity markets here some sleepless nights these days.
Oh, well, I'm sure, because we have seen the crude oil prices gain up by 8 to 9% in the previous week. Currently in the markets, we have seen that those prices come off its highs, but the strength clearly has been seen because of the strong Chinese demand. The speculative buying has been on the higher side. Russian saying that they are going to cut output by 500,000 barrels from the month of March is the reason that you saw that major premium being added into the prices. And then apart from that, Saudi Arabia also raising its official prices for the Asian consumers for the first time in 6 months, has been supporting crude as well. Today we've seen some profit taking because the US dollar index has gone on the high, almost inching towards 104. And then the markets are looking at enough and more availability into the international markets, with the Russian Urals as of now down nearly 42% on a year-on-year basis in sense of prices there. If you look at the Chinese crude imports as well, while the markets is anticipating strong on-ground loading numbers, but when you look at the exact numbers itself, November was 11.42 million barrels per day, December was slightly lower, and January has seen numbers below 11 as well. Feb, in the meanwhile, does promise of higher numbers, but the street still is awaiting on whether these numbers would be higher than the November and December imports that the Chinese did. Apart from that, the US natural gas storage also is 10% higher on a year-on-year basis. Last year, same time, we were at 2.13. This time around, it's at 2.36 trillion cubic feet per day. So whether it's crude or natural gas, we have seen enough and more inventories, with Russian availabilities also continuing into the market, is the reason that after strong gains that we saw in the previous week, there is some profit taking that Asia has started in the week today.
Let's talk about individual stocks. Oil India is surging in trade on the back of its Q3 numbers. Sonal is here to tell us what the numbers look like. Sonal.
Thanks a lot for that. Good set of numbers from Oil India. This is despite the windfall taxes in the quarter gone by. Revenues came in at 5,400 crore rupees. The EBITDA was high by almost 1,000 crore rupees on a quarter-on-quarter basis at 2,855 crore rupees. A massive jump in margins at 53.1%. Profits, however, they were flat because of a lower income component as well. The net oil realizations came in higher on a quarter-on-quarter basis at $77.1 per barrel, and this despite the windfall taxes being higher. In terms of the other parts of the business, the Numaligarh refinery expansion is expected to be completed by FY24, FY25. The total capex here is 28,000 crore rupees, out of which 70% will be funded via debt and 30% via equity. Motilal Oswal has a buy rating of the stock with a target price of 272 rupees per share. The fact that they are liking is that government is allowing a post-windfall tax realizations between $68 to $81 per barrel, and that makes them positive on both Oil India and ONGC as well. ICICI Securities has gone ahead, increased earnings estimates by 18 to 13% for next 2 financial years. Gas realizations and GRM for Numaligarh refinery was higher than the historic trends, and valuations at 4.4 times also provide support, and that's why they also have a buy on the stock.
Got that, Sonal. Thanks very much for the details. So that's a positive reaction. Now let's talk about a negative one. It's a big negative reaction at that. Look at the stock of City Union Bank. It has fallen almost, 12 to 13%. Yeah, 13.5% right now. And that's probably because in an era where most banks are showing you better asset quality, stability in terms of just the health of the book, this is one bank that's gone in the other direction in the third quarter with a deterioration in the asset quality. Ekta is here with all the details on this one. Ekta, what has caught your attention in the numbers?
Well, it's definitely the asset quality, but I'm just going to get to that in just a bit. I just want to go through the basics of the numbers first. NII was up 13.5% year on year, but it was down 2.1% Q on Q. Profit as well was down 21% on a sequential basis, but was up around 11% year on year. Provisions have spiked up 81% year on year and 113.8% Q on Q. Net interest margins have come in at a 6-quarter low of 3.88%. This is versus around 4% in the same time last year and at a similar level in terms of the last quarter as well. Asset quality has been the big dampener. That's exactly the point. A lot of the companies or banks have shown stabilization of asset quality or maybe even a marginal kind of improvement this time round. Their slippages have come in at 439 crores versus 261.5 crores, which is up 68%. Annualized slippage ratio now stands at around 4.08%. The gross NPA on an absolute basis has risen 6.8%. Net NPA also at elevated levels of around 1124 crores. Recovery and upgrades have not come through as much, so that came in at around 173 crores. Write-offs 138.9 crores versus 114 crores. Restructured book now stands at 1130 odd crores for the company, which is down 11.9%. So overall, it is a weak quarter as compared to its peers. City Union Bank has reported an increase in slippages this quarter.
Okay, got that, Ekta. Thanks very much for spelling out all the details there and giving us some perspective. 13% down on City Union Bank. Well, now let's pull back a little bit and look at one topic of conversation that's really been dominating the headlines, and that is ChatGPT. Rima has been looking at a lot of the commentary from the perspective of the stock market and the listed IT universe and what the implications could be. Rima, this will be very interesting and I want to learn more. I think it's a JP Morgan report, right?
It's a JP.
What are they saying?
Well, it's a JP Morgan report, and they're saying there are good things and bad things. So the positives of ChatGPT on technology per se, one, they're saying that code writing could be a lot more easier. All you will need is validation by an experienced programmer, but the total effort comes down significantly. So therefore, there is a big boost to productivity, and that can be retained by the IT vendors, at least in the initial space. So the positive is code writing becomes easier. Therefore, there is a boost to productivity. And secondly, they're also saying the recruitment now could be easier because, professionals or, the younger crop may find it easier to learn about coding. So recruitment could be easier, supply side situation eases. But that's the positive. On the negative, they're saying is that whenever in the past we've seen productivity benefits, companies have had to pass it on. So pricing comes under pressure. It's got a deflationary impact. So according to JP Morgan, the risk is that pricing could come under pressure. Who could be the potential winners and losers? They're saying in the Indian IT space, companies who have a high focus on training their staff, because ChatGPT will require retraining of your employees. So companies like TCS and Infosys, where the focus on retraining, on skilling is very high, could actually be best placed to navigate the entire thing.
So they'll be the winners.
They could be the potential winners compared to the rest of the IT pack.
And who's at risk? Especially since you mentioned pricing could be at risk. So in terms of companies or players?
Well, it's hard to say, right? But anyone who is not able to retrain their staff, so I guess if they've singled out TCS and Infosys as the winners, you could assume the rest of them could be under pressure. But the big risk could be pricing, because this disruption could be deflationary, and that is something that we will have to watch going ahead.
Absolutely, and we will do that. Thanks very much for that explanation. We'll take a quick break, but on the other side, a big conversation lined up. We will come back and we'll put the spotlight on the Adani Group once again. The group has pledged additional shares in Adani Ports, Adani Transmission, and in Adani Green in favor of SBI Cap trustee. We'll be joined by...
Over the weekend, 3 Adani Group companies announced to the stock exchanges that they have created additional pledges of their shares in favor of SBI Caps, which is a trustee company. The 3 companies were Adani Ports, Adani Transmission and Adani Green. The pledges were intended to top up collateral for a loan to State Bank of India To understand more on this, we are joined by Mr. J. Swaminathan, Managing Director, State Bank of India. Mr. Swaminathan, good morning. Thank you very much for your time. If you can tell us any details about what is the total amount of loans involved, how much did the collateral fall short?
Thank you, Lata, for having me here. As you mentioned, of course, this was a top-up that was required for maintaining a collateral security coverage. As we had disclosed earlier, we have an exposure of US dollar 300 million facility that was granted for the Adani Group's Carmichael facility in Australia, of which they have drawn down USD 180 million towards the railroad part of the project, while the mines they have so far managed to complete with their own resources. So there is one of the covenants for this facility is that they should maintain 140% collateral coverage. In addition to the project assets, they are required to maintain this collateral coverage by way of pledge of shares from the three companies belonging to the group that you mentioned now, the Green Ports and Adani Transmission. So every month end, we have a system by which this covenant is reviewed. And any shortfall that occurs on account of movement in the value of these stocks, the number of shares are required to be topped up to ensure an all-time coverage of 140%. So this is an activity that we do every month, and we have been doing it ever since this facility was extended sometime in May 2022. And twice it had happened in the past, in June and July. And the third one happened on 8th of February. That was what was disclosed by the SBI Cap trustee. And the number of shares pledged, etc., is already in the public domain. So I will not go into the details, but it was additional share requirement. In all, as we clarified, it amounts to about 1.06% in the equity of Adani Green, and about 1% on Adani Ports, and about 0.55 on Adani Transmission, which in our view is a very small portion, and to cover the facility by way of additional collateral coverage. I hope that clarifies.
Yes, fair point, sir. Mr. Swaminathan, that's clear. Yeah, go ahead.
Yeah, just to add on that, as it was clarified again, this is not any loans that was granted against pledge of shares. No additional finance was granted against this additional pledge. These are essentially to maintain a covenant that is pre-existing in terms of an earlier facility, which is completely covered both by project assets as well as this collateral coverage. Thank you.
Yeah, that's very clear, sir. It was important that this is not a new loan, which SBI sources told us over the weekend itself. It's not a new loan. It's not a new pledge. It was additional topping up collateral for an existing pledge. Mr. Swaminathan, you know, earlier the understanding of the market, I assumed, was that most of the Indian lenders were giving loans for existing projects which were generating cash. Do you have more such loans which have been given on the basis of pledged shares?
Yeah, two things, two parts I would like to respond. Number one, incidentally, this project is already operational. The Carmichael project in Australia is already operational. It's not a project under implementation. The project is already operational and generating cash. Number one. And number two is in terms of pledge of shares, wherever it has been taken by lenders by us, they have always been stipulated as part of the collateral coverage, which is over and above the project assets that are securing the credit facilities that are extended. There is no finance extended towards pledge of these shares. So that does not exist in our books. So I hope both are clear.
Oh, that's very important. What you're saying is that there is no loan at all given exclusively on a share pledge. These were only additional collaterals taken, and most of the loans were given for actual cash flows, cash flow generating projects.
Absolutely, you're right.
Okay. Is there any proportion you can say what part of your loan, the chairman said on the day of the results that it is 0.9% of the outstanding book of State Bank of India. What would that work out to? About 25,000 crores? What part of the loan may be, propped by shares, you think, if you can give a percentage like that?
Yeah, no, the first part of your question, what the 0.88% translates to, is a simple arithmetic, because our book as at the end of December was 31.5 lakh crore is our total advances. So 0.88% translates to something like figures little lower than 27,000 crore. I think that's already in the public domain.
Yes.
And that is well below the large exposure framework that is permitted by RBI. And that covers both fund-based and non-fund-based outstandings pertaining to this group. So that's the exposure part of it in terms of both percentage and number. And as regards how much portion of this is secured by collateral security of shares, I don't have a ready number, but I can clarify that it's a very, very minuscule portion. Wherever in certain assets, an additional collateral is stipulated. Typically, as you would know, when a project is under implementation, we would like to have certain additional collateral in addition to the project assets. So this sort of mostly interim arrangement, and the portion that taken as collateral security by lenders like us is very, very minimal, very minuscule. I don't think it will be anything very significant.
Okay. Is there any other conversation with any of the group companies in terms of asking for collateral or in terms of negotiating for another loan?
None so far. As of now, no situation has arisen for any of this because see, all our exposures are secured by mostly operating assets which are generating adequate cash. The EBITDA that's being generated by the group companies are more than adequate to service the loans. So interest and principal, whatever that has been falling due so far, is being serviced, and even in our review over the next 12 to 18 months, as we are in a position to see at this point in time, we don't see any challenge in terms of servicing any of the loans. So there's been no occasion for us to have any discussion with the group in terms of its serviceability. But I think they are also making adequate disclosures from that side in terms of what are their plans, in terms of how do they plan to finance and how do they plan to repay or prepay, etc. I think we will rather be guided by the commentary that the company provides from the lender's perspective. As Chairman clarified that day, there are no concerns at this point in time. And anyway, all the large exposures are reviewed on a regular basis by the board. And if there are anything that requires our attention, warrants a discussion with the company, we'll certainly be taking it up. But at this point in time, there has been no such occasion.
Well, the group is executing a large number of projects in the country. Some of them would be under construction. So are there projects where you have given loans to projects which are still not generating cash?
Yeah, that is true.
What proportion would that be?
Yeah. The large group like this will always have some projects that are in pipeline. But two things that we should remember. Number one is that for each one of the project, groups like this will first achieve a financial closure, without which they don't proceed. So there are no projects that are awaiting a financial closure, which means that the funds for the projects have been tied up either by way of equity or by way of loans or the market instruments that may come up. So obviously the projects that are under implementation are all where the financial closure has been achieved. Number one. Number two, group as a whole has got adequate strength and surplus cash flow. So in case if there are any requirement towards any one of the projects, we are confident that groups like this ensure that group level support, the parent level support is also available in case if any of the projects that require additional funding or if there are any delays in the cash flow generation. Third, at this point in time, whatever projects that are under implementation that have been financed by us, we again have a routine review on a monthly basis. We have not observed any delay or any difficulty in completing those projects on time. So there are no concerns at this point in time in terms of projects that are in implementation.
Okay, that perhaps satisfies all questions. Just a final last one. There are projects that are yet to start, like for instance, the Navi Mumbai airport. I would assume they would have approached State Bank of India for such loans, such projects as well. Will there be a rethink on the part of the bank in terms of proceeding with more exposures?
This is kind of very conjuncture, kind of hypothetical answer only we can provide, because typically, as you would know, not only at this time, any time a request for a loan is always a matter of discussion between the bankers and the lenders, and then from time to time a credit call will be taken basis the circumstances that prevail at that point in time. As I mentioned earlier, at this point in time as we speak, there are no concerns, so there has been no change in our approach. But we will keep watching the situation, and if there are anything that require any steps to be taken from our side, we will act accordingly. The second is that any new projects, probably the group also may be working on their own plans in terms of how to take it forward. And again, I would rather wait for their commentary to be said about the projects that are yet to commence or fairly at an initial stage. I think the company would be in a better position to clarify to us than us at this point.
Okay, so just one more thing. You know, some of the loans which are extended by global banks, we understand the bulk of them are going to come up for refinancing in 2024. But we were told that a portion of 745 million comes for refinancing this year itself, 23. If they approached you, have they approached you, and would you be interested in refinancing that loan?
Yeah, the party response is no, they haven't approached us. There have been no discussions, as I mentioned, in terms of any additional finance that they may require or a refinance that may require. So it will be difficult for me to respond at this point in time as to whether what could be our response. So if and when a proposal of that nature comes up, I'm sure that we will have time to discuss that with the company and take a view in that matter. The second, again, I would like to draw your attention to the company's statement so far, that as far as this refinancing is concerned, they've said that they have their plans in place, and even some of the market borrowings that they were planning to do in the month of March, they have decided not to do, and that they will be able to manage with the cash accruals that they have at their disposal. So I think it will be better to wait for their response, and if at all any additional requirement or a refinancing request comes, I'm sure the Lenders Forum will get to meet and discuss that at that point in time.
All right, we'll touch base with you at that time. Thank you very much, Mr. Swaminathan, for joining us and clarifying about the additional pledges that were announced by the companies over the weekend. So just to wrap up, these loans, thank you. The additional pledges are actually minor. It's just about 0.3% of the total shares of the company, leading to about 1% maximum for the three companies mentioned. For one of them, it's only 0.55. The additional pledges are not huge, and they are not for a new loan. They are to top up an existing loan. Back to you, Surabhi.
Thank you, Lata, very much for that. And I think that's an important clarification to keep in mind. This is not an additional share pledge, which was the confusion, I think, a couple of days ago. These are just covenants of an existing loan that need to be adhered to, and therefore the additional top-up has been made. Thank you for that conversation.
And the company also saying, right, that they were earlier planning to draw down some loans in March, but now they've decided against it, and they're saying that their existing cash flow is going to be sufficient, right?
Yeah.
So that's also fairly important. Get into a break?
Absolutely, let's do that.
Back here watching Trading Hour. The next corporate on our radar is VA Tech Babak. The company has reported a steady Q3 and increase in profits on they've seen a decline in profits. Profits have gone up on a year-on-year basis, though there is a decline in revenue and EBITDA. Higher E&P project mix and muted Europe growth has impacted the company's top line. Rajneesh Chopra, the Global Head of Business Development at VA Tech Babak, is now with us on the show now. Mr. Chopra, morning, and thanks so much for joining in. Was just looking at your order inflow numbers. It's roughly 1,900 crores in Q3, 1,886 to be precise, which compares with 1,500 crore in Q2. So there has been a pickup of nearly 400 crores on a quarter-on-quarter basis. But the entire pickup is from the India business. The rest of the world order inflows are flat on a sequential basis. And you've spoken about the European business and the impact that you've seen over there. Can you tell us what is happening with respect to the rest of the world, the exports for you? And are we seeing any slowdown which could hurt growth for you going ahead?
Good morning, and thanks for having me on the show. I think, as you mentioned, yes, as far as top line is concerned, it's muted, but we are not concerned about it because if you see, in the last 2 years, we have been focused on cash. So probably if you see both last 2 years, we have been cash positive. Today, we are getting better results as far as profitability is concerned because of cash management, cash flow, and also lower interest and lower bank charges. So these are a few factors which have resulted in a better profitability for us. Now, coming back to what you asked, I think today, if you look at our order book, it's evenly balanced. I think 50% of the order book is from overseas and 50% is from India. Now, going forward, I think I'm happy to share with you and your viewers that we are very comfortably placed as preferential bidders in contracts worth around 5,000 crores, which is much more than what we have clocked in last 9 months. So these are the orders which are again high technology. It will have desalination, it will have wastewater treatment plants, and it will again be a mix of India as well as overseas. As far as Europe, what you mentioned, we have never focused Europe as a growth market, so I don't foresee any growth coming from Europe. But if you see in last 1 year, another market which we have added as our target market is Russia. We already have a good contract from Russia, and we see, because India has not accepted any sanctions, that we will be the preferred bidder in a lot of contracts in Russia. So over the next 12 to 18 months, that could be one market from overseas which will contribute substantially to our order intake and revenues.
So this preferential bidders in contracts worth 5,000 crore rupees. What is the probability of you converting these into real orders, and what is the timeline?
The probability of converting them is very high. It's in large contracts, before it is awarded, there are always a lot of, formalities, systems, processes to be adhered to. We are very well placed here today. As far as this thing is, when I say it is almost that we are pretty sure, the probability would be very high. And the timeline, if you're asking, at least whatever number I have said, around 5,000 crores, this timeline will be more before the March 2023.
You're saying in the next 1 month, you're likely to convert orders worth 5,000 crore rupees?
Yeah, maybe even lesser than 1 month.
Lesser than 1 month. Mr. Chopra, we're out of time. Would love to connect with you some more to talk about the prospects in Russia, but that's Viatech Vibhag. The order book currently is about 10,400 crores, but they are preferential bidders to the tune of 5,000 crore rupees. Very high probability of these orders which are in the pipeline and where they are the preferential bidders will get converted, and this could happen in the next 1 month before March 2023. That's Viatech Vibhag for you. The stock is a bit subdued because it was a muted top-line performance this time around. Out of time on trading hours. Stay with us. Halftime report is up next from the entire team. Thank you for watching.